What are ETFs? Why do they matter? Exchange traded funds are really important. And in this video, we're going to go over what they are. If you are a new investor, welcome. I want to teach you guys why ETFs are an amazing way to go for you. If you're new at this game, experienced investors use them, brand new investors use them. They're a great way to get into the market game with low risk. And if you're new to this, my name is Brother Joshua, and this is the journey, the road to becoming a successful investor and day trader for generational wealth purposes only, not just for myself, but for you as well. In obedience to what God has told me to do, I'm documenting my journey. And every time I learn something, I share it on here and you learn something. So I pray and I know you guys will be blessed by this. Let's get into it. So an ETF is an exchange traded funds. Think of it as if you go to a restaurant and instead of having to order one item off the menu and being stuck with that, you get to order a plethora, like a platter of things off the menu, and you have a whole plate full of different items, like a charcuterie board, different stock options all in one basket, all on one board. That is an exchange traded fund. These things are very easy management and low risk, and risk management is what we are aiming for. So one example of a great ETF would be SPY, which tracks the S&P 500. And why exchange traded funds, ETFs, are so good is because instead of you having to do all the hard work of researching what stocks to use, if you're new to this and you don't know how, the ETF, or those that make the ETF, do all the hard work for you. There's qualifying criteria in which they go and select the best stocks. So if you want to get into the tech industry, into the medical industry, and to transportation, oil and gas, there's ETFs that are specified for that, and you want a well-rounded selection, you can go and just take a little bit of everything in one full package. So SPY, for example, tracks the S&P 500. These are 500 of the top companies all in one market. It's pretty much the stock market. If the stock market goes up, SPY is going up, the S&P 500. And the great thing is, if any of these companies are not performing to standard, they're not meeting the criteria and they're inconsistent, they kick them out and they bring in another company that is performing. So again, it is easy management, low risk, and risk management is the name of the game here. And it's amazing because they do all the hard work for you, like I said. So we're going to take a look at what ETFs to buy. I don't want to just give you ETFs to buy or to go and put your money into. I would rather tell you what criteria to look out for. I'd rather show you just what numbers you can go and see. And I'll give you some resources, database where you can easily just go and search different companies, different stocks, and different ETFs. And I'm gonna give you a little secret. If you haven't gotten into individual stocks yet, how to use ETFs to break down and see some really great companies to invest in individually for your individual stock portfolio. Let's get into it. So Yahoo Finance here is a really great resource. However, I prefer etfdb.com. That's ETF database. And we're going to hit to the drop down menu. And for this example, we're going to use QQQ. That tracks the NASDAQ 100, which is heavy leaning into the tech sector. So we're going to scroll down, and the first stat we'll look at is the expense ratio. Our average expense ratio should be no more than about 0.30%. This one is at 0.18%, so that's really good. Look a little lower and you'll see the index that is tracked. That's really important. This one tracks the NASDAQ 100 index. Proverbs 22 verse 1 says, "A good name is to be chosen rather than great riches, loving favor rather than silver and gold." So a reputable source to buy from is definitely important. The NASDAQ 100 is extremely reputable. Now we're going to scroll down a little more to trading data. Now, if you're only in the investor side of things, this statistic is not as a priority. However, it still matters to notice. If you're a trader, then you definitely want to take a look at the volume, which should be about between 40 and 60 million. This ETF is at 49 million. That shows strong volume. Now we're going to scroll back up. We're going to select our favorite drop down menu and go over to performance. Scroll down and you can see the monthly and yearly performance. That 1 month is showing minus 7.54%. Now, the overall ETF database category for all the ETFs in this category is minus 8.03%. That means QQQ is performing pretty well in comparison to all the other ETFs within the same category. Another important stat we want to look at when gauging our ETFs is the dividend yield. So we're going to scroll back up to our favorite drop down menu and select dividend and valuation. Scroll down and here are all your dividend stats. The dividend yield should be about 0.5% to 0.7%, and this annual dividend yield for QQQ is at 0.50%. That is a really good dividend yield. Now, here's one of my favorite parts. One of the most exciting things about ETFs is we get to take a look at the holdings. Remember, an ETF is like a basket full of stocks where they comprise a bunch of the best stocks. QQQ is very tech heavy, so we're about to see a lot of the tech sector. And in that basket, we get in a whole collection, a whole array of companies. So now we get to see which stocks, which individual companies did QQQ pull from to create this ETF. This is really important because when we want to start investing in our individual companies, we can see some of the best performing companies that we can go for. Let's take a look. Now we're going to scroll back up. Going to find our drop down menu and locate the section that says holdings. Go ahead and select the holdings link. And boom, here is the gold mine. This ETF holds 15 holdings and it shows you the percentages that it holds for each of these companies as well. You have Nvidia, Apple, Microsoft, Amazon, Tesla, Google, Meta, Palantir. Don't sleep on Palantir. Take a look into it. Costco. These are some of the biggest and most powerful tech and a few of them outside of tech companies that are all wrapped up in one ETF. Now here's a little extra bonus for you. When we researched the ETF QQQ, it brought up the stat sheet. But if you scroll down past all the statistics that we went over earlier, at the very bottom, you're going to see alternative ETFs. And this actually gives you a list of different ETFs that are put together that you can also research and possibly invest in. What a great resource and tool for new investors. Now remember, the expense ratio that we went over in the beginning of the video is a very small percentage that they charge for the hard work that they do for you. Because like we said earlier, they are getting all the best companies to put into one basket and kicking out any companies that underperform. So at the end of the year, let's say you've made $1,000 profit, they're taking $2. Not a bad deal. I really hope this video blessed somebody. Go and research some ETFs. Comment here. Let me know what ETFs you like, which ones you're jumping into so we could talk about it. God bless.